Oh yeah. Okay. So can you see my screen? Hello,
Yeah,
can you hear me?
can. Yes.
So now we have this one is it's not very important. The thing is, if you have the understanding of all these, you don't need to remember the chart patterns. Okay? Understanding supply and demand zones in relation to the volume. Okay. So using advanced tools, Fibonacci, wide wave, retracement zone, volume profile, and trade and window. That is the bullish and breakout. So I'm going to use this in the next webinar here. These one, I think it should be studied later on. Okay. First of all, I will go from here. Understanding characteristics of bullish breakouts, pre-breakout, building higher lows in the before this and volume patterns. Now, as I told you, the breakout here, breakout has a specific conditions. Okay, breakout has a specific condition. For example, if we observe a trading range, can you see my screen? A whiteboard?
Yep. Yes.
Okay. And if we see a breakout here, for example, we're going up here. Okay, we bounce back. Okay, this one here, we bounce back. Now, how do you know that this breakout will be successful? How do you know? Okay, so we have several features here. Number one, breakout move will experience increase in spreads and increase in volume. Okay, first thing. Okay, number two, either breakout move. Now, let's suppose we are talking about breakout move to the top. Okay, either breakout move to the top will print higher lows into the resistance, or it will experience pre-breakout buildup. I'll explain you what is pre-breakout buildup. Okay. So first of all, let's condition breakout move. For example, once you see the breakout move, the spread of the bar will increase. You can see the spread of the bar will increase. It will increase in size like this. So yeah, I'm talking about this move, this breakout move. Okay, this breakout move. During this breakout move to the top, the spread of the bar will increase. Okay, the spread of the bar will increase. The bars, let's suppose these are the bars, breakout bars. It will increase in size. Got it? I think you already know this. You already know this, right? The spread will increase. This is first condition. Plus the volume will also increase. The volume on the flow will also. Got it? This is second condition. Okay, this is first condition. Either the breakout on the top will print higher lows. Now you will see as we are breaking to the top side. Okay, for example, this is a breakout here. It will start experiencing higher lows. It will start experiencing higher lows like this. Got it? It will start printing higher lows into the resistance. Higher lows because the market is changing. I told you already. This condition you already know, right? The second condition is when sometimes you will not see higher lows. Sometimes you will see another situation. We call it as pre-breakout buildup. What is pre-breakout buildup? The price will go down here, right? And before breaking out, it will go up. Before breaking out, it will make a small range like this. Small range. This is known as pre-breakout buildup. And then finally it will break out. Got it?
Okay.
Yeah. If this pre-breakout buildup, if this buildup is on the top, so it means the breakout will be on the top. If this breakout is buildup is on the low side, it will be on the low side. Okay? The breakout will be to downside. Okay. So you understand all conditions. Now, if we are breaking to the downside, what will happen? Let's suppose now we are breaking to the downside. What will happen? The price will start printing what?
Lower high.
Yeah. What is the price will start printing? Lower highs to the support, towards the support, right?
Yeah.
So it will say, we will say that there will be a breakout to the downside, because here the price is making equal lows, equal highs, but here suddenly start making lower highs. So there will be a breakout to the downside. Or the second situation would be, as I told you, the breakout move will have pre-breakout buildup. Okay, you will see like this range, and then once the price is coming near the breakout, you will see the price will start making a very, very small range to the towards support. Got it? Got it?
Okay.
This is known as pre-breakout buildup. Got it? Build down. This is build down, and if it's on the top side, it's known as build up. Okay. Got it?
Okay. Okay.
Yeah, this
Got
is
it.
this. And what we call this situation? Price is making, sorry, price is printing lower highs towards the support, or just call it as ice, whatever you want to call it. Okay. Got it?
Okay.
Any
Yep.
confusion?
Got it. So far,
Yeah.
so good.
Okay. And the third characteristic is when during the breakout, during this breakout move, once the price breaks out, for example, this move here, as the price breakout, what you will notice? Increase in spread, increase in volume, and price closing to the lows, or down bars closing to the lows, right? Right? It will not close on the highs
Yep.
only. It will close on the lows, because if the price close on the lows, it means it is a very bearish bar, right? For example, if the bars are moving like this to the breakout bar, this is a breakout bar, the bars are moving like this, it will close on the lows like this. But if it close like, it will close on the lows. But let's suppose if it goes down like this, and if it close on the lows, and then suddenly during the breakout, it close on the high like this. What does it show you? The sellers are, the buyers are coming on this, right? That's why they are closing the bar. So it means this breakout will fail. Got it?
Okay.
Yeah,
Got it.
this is very important. So you must know when the breakout, which way the breakout will happen. Okay. Number two, you must know the conditions of breakout: increase in spreads, increase in volume, down bar closing to the lows. And if the breakout is to the top side, then what we will see? We will see the price is printing higher lows to the towards the resistance and build up to the top. Got it? Pre-breakout to the top. Or and then you will see increase in spreads, increase in volume, and up bars rather than down bars. If it's going to the if it's breaking to the top, then it's the up bars closing on the lows, on the highs. Got it?
Okay.
Yeah. Any confusion?
So far, so good.
Okay. For example, if this is a breakout, if this was genuine breakout, you see, you see the price is, yes, the price is making lower lows. Now you will say, oh, this is a genuine breakout. But what happened? What do we experience here? Oversold. Okay, high volume, automatic reaction. So you cannot trade this breakout. Do you understand that? You are going against the trend. And what happened during the breakout? What happened? The price breaks down and then immediately reverse. Can you see?
Yeah.
Yeah. But if you talk about this breakout, let's say, if I talk about this breakout, as the price is going up here, what do we see here? The price is printing what? Higher low. Am I right? You see, the price print higher low. The price breakdown, and so before breakout, what does it show us? Higher low. Can you see? Higher low. And during the breakout process, what happens here? The price, this breakout was not very powerful because the volume is not increasing. So it failed, it came down, and then again we start breaking out again. Now we see what do we see? We see increase in volume, increase in volume, increase in volume here, right? And what do we see here? This is what? This is what we known as pre-breakout buildup. We call it as pre-breakout buildup. Got it? Towards the end, we see a small range, and then after this, we break up. And as we break up, what do we see? Increase in volume, increase in spread. This is the pre-breakout. Got it?
Okay.
Yeah. And if you see this as well here, now you see during the breakout, I'm only talking about the move towards the breakout. What happened to the volume? Volume increased, right? Spread increased. Okay. All right. And price, what is happening to the price? You can see the price is making higher lows, right? Higher lows towards the resistance. And you see increase in volume. Got it? So this is a successful breakout. Now, what is this one? Key reversal. Do you remember key reversal?
Yeah.
Yeah, this is key reversal. Similarly, if we can see any kind of distribution phase here, if you draw a small range here like this, okay, what do we see? Price is making what? Price is making what? Higher lows, going into resistance, and then the price volume increased here in the breakout, increased. Okay, and then the price goes up. We did not get any chance to retest, and then the price came down. Okay, the price came down, and then what do we see here? Spring type of action. Can you see spring?
Yep.
This spring type of, now spring does not have to be on this side. The spring can only be on the top as well. For example, we go up, come down, the price comes down, and then reverse. This is also spring. Got it? Price will shoot up. Okay. So what do I mean to say? That you would say that spring is only on this side. For example, let me show you that you have this trading range. Okay. You would say that, okay, this is the price goes up here, the price goes up here. Okay. Now, as I told you, the spring is what? The spring is always towards the support. Am I right?
Yep.
This is spring. Okay. This is spring. And as we go to the upside here, in several situations, what you will see, the price goes up here and then comes down again and forms another spring like this. Now, why we call this as a spring? Can you tell me why this is spring? This one is support. This one is resistance. Then why do I call it spring when it's a resistance? Because the resistance is broken over here, right?
Yeah.
Now remember this rule. You know this already. Broken resistance acts as future support. Remember?
Yes.
So this one is actually what we call this line when the resistance is changing role with support. When resistance is acting as both support and resistance, we call this as axis line. Okay.
All
You know
right.
about this. You know about this, right?
Yeah. Yeah. Yeah.
Okay. All right. So Now you know the conditions about support and resistance as well, understanding this pre-breakout, printing lower highs into support, volume patterns, understanding the shell, this last one. These three one we will discuss next week. Okay? Now, understanding the characteristics of bullish and bearish breakouts. Okay, failures, breakout failures. Now, when do the breakout fail? The breakout fail in two conditions. Number one condition is, for example, the breakout fails in two conditions. Okay, I will tell you this condition. Number one condition is, as we go to the top side here, we are experiencing breakout here. Okay, this breakout is known as what? We call this breakout as JAC, right? Jump across the creek. Okay. Now, when this breakout will fail, when this breakout will turn into a up thrust and go down. Now, two conditions can happen. Either it will go down, test this region and go up. This is condition one. Second condition is it will fail here and then it will go down directly and it will turn into up thrust. Am I right? So how do we know this breakout will fail? Number one condition, first situation. Okay. During breakout, price spread is increasing, but volume is decreasing. Got it? Price spread is increasing, but volume is decreasing. This is first condition. When the price spread is increasing, what we have anomaly. I think I told you about this yesterday. Anomaly. Okay, the second condition would be during breakout, price spread volume increases, spread and volume decreases. Okay, spread and volume both decrease. For example, in this condition, what will happen when the breakout is powerful? It must have an energy. The breakout must have energy. During the breakout, the spread and volume should both increase. But if you see that the price spread is increasing, but the volume is decreasing, then it's not a true breakout. Or you see that the spread is and volume both are decreasing, then it's not a true breakout. It will fail. It shows that the buyers are not strong. Buyers are not strong. Am I right?
Yes, correct.
This is second condition. What the third condition? During breakout, spread decreases, but volume increases. What this condition is known as? Effort versus no result. Got it? This condition is known as no demand. So either you will have this condition. In all of these three conditions, the breakout will fail. Okay, that breakout to the upside. I'm talking about the upside. For the downside, it will be exactly like opposite. Okay, I mean these things, but here we have no demand, so we will call it as no supply. Got it? Yeah. Got it or not?
Yeah, this is good.
For example, this one here. Is this a true breakout or not? How do we know? We join the support line here, we break out. What happens here? The price spread as we go up here, as we go to the upside here, this whole move, what happens to the spread is increasing, volume is decreasing, and suddenly we see a high volume, and what do we see? Increased volume, but after that, what do we see? Effort versus no result. Can you see?
Yeah.
So this shows us, and how does it close? How does it close? It's close on the low. If it was a true breakout, it would increase in volume and it would close on the top. Got it? So this is a failed breakout.
Yeah.
This is a characteristic that this breakout will fail. Okay, now you see another one. Let me show you another one here where the breakout is failing. This one here. Yes, the price spread is increasing, closing on the highs. Volume is also increasing. This is a true breakout. But after breakout, what happened here? The price immediately reversed, and rather than testing, it went down. Okay, and then the price made a second attempt. So there is no way you can trade this. You cannot trade this, right? Breakout. You need to wait for the retest here. But what happened during the retest here? You did not find any optimal condition, right? So if you buy here, let's suppose if you buy here, you would lose your trade. Okay, because why you would lose your trade? Because you have to combine the structure with the background. But if you draw the channels here like this, the Wyckoff channel, you will easily identify that this condition is overbought. So if you're trying to go long in this condition, you are wrong, because your bias is what? Your bias is bearish. Am I right?
Yeah.
So never go against the bias. I told you. Also, one thing you must know, overbought and oversold condition will give you the bias. The bias, whether it will be bearish or bullish. This is first condition. You should remember. Okay. Now you see about this one here. Is this a true breakout or not? Yes, this is a true breakout. Why? Because the price spread is increasing a little bit, and you see the increase in volume. This is true breakout. But you did not get any retest. Can you see? Can you see? Because after breakout, what do you see? The price will go back, okay, and then it will retest and then go down. Got it?
Yeah.
We did not get this condition over here. And rather than the price kept on moving down, you cannot trade this condition. You have to wait and wait. But as you go down, as the price go down and price starts making lower highs here, right? As the price goes down, what do we see here? The price immediately reverse here, right? If you draw a little bit channel here, and we notice a shortening of thrust here. Got it? We reversed. So we made a support here, and we start making accumulation pattern over here. Okay.
Yeah. Okay.
Now, how about this breakout? Failed or successful? Now, during the breakout, what happened? The price spread is increasing. Okay, and then the price spread decreased during the breakout. But what happens to the spread? Volume.
Volume.
The volume, the price spread decreased. You see, during the breakout, the price spread decreased. As compared to this one bar, the price spread decreased over here. But what happened to the volume? Volume increased. Am I right?
Yeah.
This is what? This is effort versus no result bar. So this breakout will fail. And what happened after this? We see a huge bar and then reversal. This is up thrust. And then we go short. So this breakout will fail. Got it?
Yep.
Yeah. Now here, this breakout. What happened to this breakout? When we breaking out, the price spread is increasing in length, but you see the volume is decreasing. Price spread is increasing. And what happened to the last bar? The same length. This bar and this bars are, of course, of same length, but see the volume here, very huge. Effort was no result. And see where this bar is closing. Can you see?
At the high.
On the highs. If it is a true breakout, it will close right over here, not over here. And then it reversed. Breakout failed. But how about this bar? If you draw this channel right over here, what happened to this bar? The price spread increased and volume also increased, closing on the high. This is a perfect breakout. Can you see?
Yeah.
And we are not, and we are in what? We are in accumulation market. Can you see? We are in accumulation. Okay, we are in accumulation. Got it? Right?
Yeah.
So this breakout.
Yeah.
How about this breakout? Successful breakout. Why? Because you see spread, a little bit slow spread, and then the spread increased during breakout. Volume also increased. Got it?
Okay.
Yeah. How about this one? Yes, the spread is increasing, volume is increasing, but what do you notice? After this, the price immediately reverses, but it does not close on the highs. It closed on the mid, right? Of the highs. So this is not a true breakout. It's uptrust. Got it?
Okay. Yep.
Okay. How about this breakout? You see, you draw this line over here. As the price goes up, it increases in length. This is a perfect breakout. This breakout is successful. How about this breakout? This one here. This breakout is successful. Increase in length, increase in volume. Perfect. Got it? But how
Yeah.
about this? How about this breakout here? This one here. What happened? Yeah. We have an increase in volume, increase in spread, volume is increasing, but after that, what happened? The price immediately reversed. This is upthrust. Breakout failed. Got it?
Yeah.
Now, if you see here, another one, let me show you another breakout here. There are many examples of breakouts here where you can see whether it will be a failed breakout or this one here. What happens here? Is this true breakout or a failed breakout?
True.
Yeah, why? Because what do we see here? Higher lows. Can you see?
Yeah.
And then after higher lows, the price is broke out. Volume increase, spread increase. Good way to go. And then you see, as we go up to the upside here, the volume is increasing here. Got it? It's true breakout. But afterward, but we did not get a chance to trade this because after breakout, we must see the price come back, retest this, either this one, moving average, or this, or form spring, and then go up. But we did not get any chance, right? So what we'll do, we just wait. We'll wait. And while waiting, what do we see? Once we start making higher lows, what do we see here? Very easy. We draw the channel right over here. What do we see here? We see here an overbought. Am I right?
Yeah.
And this after overbought, what do we see? Buying climax, overbought, secondary test, spring, okay? And then after spring, test of spring, and then we went down. So we did not get a chance to trade this over, or sorry, this breakout. But rather this breakout, it was actually an oversold. Got it? So this situation can occur. Similarly here, you would say, oh, this is a breakout, I must trade the upside. But what happened? If this was true breakout, it would not reverse directly to the downside. It reversed directly to the downside and on a huge volume, and see how it's closing. So this is upthrust and it fell down. Got it?
Okay.
Do you understand? This one here as well.
Yeah.
If this was a true breakout, it would come back and retest this region. Is it a true breakout now? Yes. The price is decreasing, increasing spread is a true breakout. And it did not immediately reverse here. It did reverse here, but what happened? As the price goes up, what happened? As the price goes up, what happened? The bulls. Spread decrease, volume decrease. It means this fake breakout, this spring did not succeed. Does it succeed? No. And we see there are a lot of sellers here, breakout here. So what we will do, we will wait for the price to come back to retest this region or to this retest region. Okay, this moving average or this, it retested the moving average and you see no demand. Can you see no demand over here?
Yeah.
And you will short the market for the next. Got it? So yeah, if you draw the structure here, you will easily identify where to short the market, where to long the market. Now, if you're just here, okay, you see that there is a little bit here, and you want to know whether this was overbought or oversold. What was it? Shift to the 3-minute chart. Okay. All right. Now you see here, as I told you, this one, whether it's overbought or oversold. Yes, this is a true breakout. You would say it's a true breakout. Many people will try to buy it, but once you draw the structure from here, as I told you before, once you try to draw the structure here and channel here, or you would say, oh, this is breakout. Yes, this is breakout, but what happened after breakout? Can you tell me? The price was overbought. Am I right?
Yeah.
So tell me, would you take this trade or not? Would you go long trade? And if you say, okay, I will go long here. No, you will not go long here. If you buy here, you will lose because we have already seen the overbought here. So you cannot go against the buyers. Understand?
Yeah.
Yeah. Let's see another thing as well. You will see this across many markets, whether it is gold, silver, or some other markets. See, this one here. Can you identify this easily? Can you draw the structure on this? Okay. Structure, right? What is this? Selling climax, automatic reaction, secondary test, upthrust action, or what do we call jump across the creek, test, spring, test of spring, spring, test of spring, and then the price breakup, you see? And as the price is breaking this part, you see, as the price breaks this, the price is closing on the highs and highs, right? And what happens to the volume?
Yeah.
Increase in spread, increase in
Increasing.
volume is a breakout. But as we go down and retest, now you see this bar. As we come down and see this bar, what happened to this bar? Where it's closing on the mid. And what happened to the volume? Very high volume, and it's very small spread bar. Small spread bar. So this is what? Effort versus no result. So you would go
Yeah.
long. So this is a position where you would buy your trade. You press buy. Got it? Go long.
Yeah.
This is how you're going to trade. Now let's suppose here. You see here, this situation can occur as well. Okay, you have this situation here, see overbought here. This was overbought here, and then what happens? You see very small spread bar, low volume. You cannot trade like this, right? But what happened to the next part here? Huge, it called down, rejected, immediately goes down. This is the point where you can sell, right? Do you understand?
Yeah.
This is upthrust bar, a very huge upthrust bar, huge volume. Okay, now this one, is this breakout or this is what? Okay, yeah, I say increase in volume, but the thing is, it did not close above. It did not close above. It just closed here. Yes, there is increase in volume, increase in spread, but after that, what happened? It immediately reverses. Can you see?
Yeah.
So this is a failed breakout. But if you see this condition here, this one here, what happened? See, let's suppose this one here. What happened? As we break out, increase in spread, increase in volume, the spread is increased, volume is increased. This is a true breakout. Got it?
Okay.
Yeah. See another breakouts here. This one here, you see, oh, this is a support here. This the price has increased here. This is a breakout, sorry. This is a true breakout or not? No, why? Because we break out, you see this bar. Okay, see this bar. Increase in spread. The spread is decreasing, am I right? And what happened to volume? Volume is increasing. The spread is decreasing, volume is increasing normally. And what do we see this bar? Effort versus no result. Can you see? Effort versus no small spread
Yeah.
bar, huge volume. So this is what? This
Yeah,
is a
correct.
fake breakout. It ultimately this shows us that this breakout will fail, and it failed. Got it?
Yeah. Okay.
Yeah. So you must know when the breakout will fail and when the breakout will succeed. Now, if you see this bar here, this breakout, what happens to this breakout? The price goes up and then immediately reverses up thrust, huge volume, failed breakout. But if you see this resistance line here, what happened? The volume consistently break it and there's a huge increase in volume. Can you see? Increase in spread, increase in volume, spread and increase in
Yeah.
volume. This is a very normal situation. Okay. So this one here, breakout to the downside. But what happened? One bar, very huge volume, huge spread, closing off the lows, and then immediately reverse. If it was a true breakout, the price would not reverse, it would go down, right? And then it would retest it and then go down. But after one bar, it reversed. Got it? So this is not a true breakout. So what many people do, they see the breakout, they start selling over here. And then what happened? Their stop losses hit. Do you understand?
Yeah.
Any problem so far in reading volumes and everything?
Yeah, it's all good.
Okay, now you see this one. Okay, we have this kind of range. What happened here? You see spread is increasing. Okay, spread is increasing, closing good, right? They are closing on the lows as well. Good. And what happened to the volume? Volume increasing. So this is what? A true breakout. So what I can do,
Correct.
but what happened to this bar? You can see this bar over here. And if we draw this line, we do not find any trade activity here. But once we go to the moving average here, what do we see? This bar here. Okay, here the price spread is increasing, volume increase, nothing to do. Price spread increase, volume increase, nothing to do. But here, closing off the lows, price spread increase, and what do we see? Volume is lower than the previous two bars, no demand. Am I right?
Yeah.
No demand. And on this no demand, you're going to sell the market. You're going to sell. Very small spread here, last high, and then just sell it for. And in just one bar, this was a trade which I took last time. In just one bar, I made 3.19. I think I showed you.
Yep.
Yeah, so this was the trade which I took last time. In just one bar, I reached my target. Here, is this a breakout? This is not a breakout. Why? Because if it was a true breakout, the price goes up, it would continue to go up and then reverse after a while. But what happened? It immediately reverses. This is what? Uptrust, breakout fail. Got it?
Yep.
Yeah, easy. This one here, this is breakout. This one. We draw this time here. This line. This is breakout. No, it's not a breakout. Why? The price went down and then you see no demand and how it's closing. This is no supply and price reversed. Fake breakout. Got it?
Yep.
And how about this one? If we draw this one, what do we see? When we are breaking out, the volume is decreasing, spread is decreasing. What happened to the volume? Can you see spread is decreasing or decreasing? So this is not a true breakout. Got it? Yeah. So it will fail. It will fail. So what happened? The price failed, the breakout failed. And then what happened? What do we see? Effort versus no result. You see, price spread is similar, but see, volume is higher, effort, no result. You're going to sell it. Got it?
Yeah.
And then after this, we see another one support here. We see just one bar and price reversed. This is not a breakout, it's a failed breakout. Got it?
All right.
Okay, so the session is finished now.
Okay.
Okay, so you understand when the breakout will fail. I will give